So my lovely compliance department wanted me to read a disclosure. My name is Justin Hayek. I'm an investment advisor with PI Financial in Vancouver, BC. I'm a registrant in Canada. I'm not registered in the United States, and my presentation should not be considered a solicitation for business. PI Financial or I may own stocks in the issuers we may mention today, so don't worry, I'm not taking your money. So what I'm going to do here is we're going to take a quantitative and qualitative look at the last real bull market for the precious metals sector and seeing if we can use that info to determine how and where to invest money in the next bull market. So you'll see the CEOs here very shortly, but they are basically Keith Neumeyer, President, CEO, Director of First Majestic Silver, Dan Wilton, CEO, Director of First Mining Gold, and Michael Konnert, CEO, President, and Director of Vizsla Resources. And as mentioned, my name is Justin Hayek. I'm an investment advisor with PI Financial in Vancouver, Canada. So first chart here. Chart of the price performance of physical silver and gold over the time frame or the window that we're going to be referring to is September 1st, 2008 through to September 1st, 2011. Silver in that time frame, outlined by the grayish-black line, was up over 200%, and then physical gold up about 120%. So as you would have expected, higher precious metal prices drove overall market caps, of course, of the sector higher via capital inflows. So those two red arrows are, again, the window or time frame that we're going to be referring to in this presentation. So I went a step further now and I broke down the precious metal equities into market cap buckets. In the $0 to $25 million market cap bucket, there were about 475 different issuers. So now fast forward to 2011. Again, we have a breakdown of the market cap of those 475 issuers 3 years later. What's interesting is that only about 25% of the sub $25 million issuers 3 years later had moved up a bracket. And there were small increments throughout the various other market cap buckets as well. Not so surprising when you consider the performance of both the GDX and GDXJ against physical gold and silver over the time frame. Equities actually underperformed the physical commodities. So you've got GDXJ in the blue line and GDX in the red line. So again, underperforming the physical commodities, which was very surprising to me. So again, referring to the market cap buckets that I described earlier, we've got the best, worst, and average performance of the precious metal equities in each bucket. So in the $0 to $25 million market cap category, the worst performing equity was down 94% over that time frame. The average equity was up 85%, and the top performing stock was up 2,400%. And again, we're charting that against the various market cap buckets in physical gold and physical silver. So again, a step further, here's a description of the top performing issuers in each one, in the $0 to $25 million market cap bucket. As you would probably expect, they're all exploration companies, but they vary in terms of types of project as well as the jurisdiction. Now the $25 to $50 million market cap bucket, again, varies, but predominantly explorers and developers. There are a couple of producers in there. But again, different types of projects, gold and silver, of course, and then different jurisdictions. The now $50 to $100 million market cap bucket, again, various mix of explorers, developers, and producers. The $100 to $250 million market cap bucket varies. Okay, now this is the $250 to $500 million market cap companies. One thing I do want to note is that that star there denotes First Majestic Silver. So we'll refer to the slide a little bit later. But again, there's no clear pattern here between jurisdiction or commodity. Now getting into the large caps, as you would expect, predominantly producers, a couple of royalty companies, and a streamer as well. So conclusions from all this. What have we learned from the last bull market? And then how can we potentially improve our investing performance in the next bull market for precious metals? Conclusions are, one, there's no clear winner. Whether it's style of project, grade, be it low, medium, or high, or jurisdiction, as investors, we have to diversify. And that means between commodities, grade, again, low, medium, high grade projects, as well as between explorers, developers, and producers, as well as jurisdiction. One thing, and the second conclusion is, you don't want to invest in the average precious metal company. As you've seen, average won't cut it. You have to invest in truly top-tier assets managed by top-tier management teams. At the end of the day, you're investing in companies' people and not its stock. It sounds so cliche, but it's true, because the people and their ability to execute and deliver shareholder value. You could have a world-class asset, but if you have an incompetent management team handling it, they'll never be able to unlock the full value. Therefore, invest in the people. So without further ado, I want to bring up the panel of CEOs here. If you guys want to come on up. So first, Keith, we'll start with you. First, Majestic. The Canadian listed security was a top performing precious metal equity, as I mentioned, in the $250 to $500 million category over the time frame. What did you and your team do so well then, and therefore led you to outperform your peers?
Well, thanks, and thanks for coming today. I think it comes down to focus, quite honestly. I think that when you, as a management team, as a CEO of a publicly traded company, I've been doing this for 35 years. I think messaging is key. I think our message to investors has to be specific, and we have to follow through, with our business plan, whatever that may be. And there's unfortunately sometimes that message gets skewed. Market conditions change, and sometimes you have to change how you get to the end point. But in the case of First Majestic, building the purest silver company in the world, staying in one country, very simple messages that we stayed very much focused on. So our shareholder base would rely on us to at least meet that basic criteria. Whereby they wouldn't wake up in the morning and saying, "Oh my God, First Majestic just invested in a copper asset in Argentina." That's not going to happen, right? So at least as an investor group, you can at least be assured that, okay, we're going to stay focused on silver and we're going to stay focused on Mexico. I think that basic message, is critical, because I see so many companies jumping back and forth, and I'm a big investor in the mining sector myself. I think I have probably 30 companies in my portfolio, and it's frustrating for me as an investor when all of a sudden they're going off on a tangent, and all of a sudden I go, So everything I've heard over the last couple of years, the reason I invested in that company must be changing, right? Because why would this management team be changing their focus? So it's almost like they're changing their directions for a reason, obviously. And that creates concern, for me as an investor, and it creates concern for obviously the people in this room as investors in the sector. So I think it's focus and messaging is the key.
Great. Okay, second question here. So for Dan, First Mining Gold, as a developer of multiple gold projects, how do you balance the need for development capital while also being sensitive to shareholder dilution?
Yeah, thanks, Justin. Listen, that's it is a real challenge, and particularly if you saw Kai Hoffmann's presentation about financings and access to capital, it's something that we're always acutely aware of when you're developing a project and you don't have cash flow. As Keith, who's the chair of our company, rightfully reminds me on a regular basis that we don't have cash flow. So I think you have to balance it. By watching the spending. You have to have, sort of as Keith said, you have to have a really focused program that identifies what the biggest opportunities are in your company, and you're allocating your time and your capital to achieving real value milestones. And so that's kind of what we've been doing. We're blessed with an exceptional portfolio of projects, 11 million ounces of gold, in really 6 projects in Canada. But we're not going to develop all of those at once. So we've really focused on a couple of what we see the biggest opportunities are, and it comes down to that point of messaging that Keith made as well. Message what we're going to do, and very relentlessly go after what we think are the highest value opportunities. And then you have to be creative in how you're going to access capital going forward, right, is the other part of it.
Okay. So, Michael, one of the slides there showed that the sub $25 million market cap bucket, if you will, has the highest number of issuers. What is it that's unique about Vizsla, and what makes it stand out from its peers, in your opinion?
Okay. Well, thanks, Justin. Thanks for having us here, and thanks to Cambridge as well. What stands out about us and what makes us unique is, I think, the potential for us to move from explorer to producer rapidly. And we've optioned an entire district in Mexico that's got enormous high-grade potential. And for us, we can explore and move on very quickly.
Yeah. Okay. Keith, back to you. So as a silver expert, why did silver outperform gold in that last bull market in that time frame that we looked at? And do you expect this to happen again in the next bull market for precious metals?
Well, I don't have a crystal ball, but silver generally does outperform gold. It's just it's a common understanding among investors, but it has a delay effect. Gold is a granddaddy of all commodities, and it's the leading indicator, and it is showing us signs of the future, I believe, in my opinion. And silver is playing some catch up, but it's got a long ways to go before it's actually at the prices I expected. In my presentation earlier today, I talked about the trading ratio versus the mining ratio. I'm not sure who was in the room at the time, but the mining ratio is 8 to 1. So for every 1 ounce of gold we're mining globally as a mining sector, we're only mining 8 ounces of silver, which is a pretty shocking statistic, and I keep telling institutions this number, and I travel around the world and I'm pounding on these fund managers that are, 30 years old fund managers that are managing, $50 billion, thinking they know everything about everything. And I'm trying to educate them on, the fundamentals of silver, and their eyes light up and go, oh, really? And then they go, of course, and spend time and do the analysis that I spent 17 years doing, and they wake up, and most of the time they do become shareholders of First Majestic because they buy in. But it's a bit of a struggle because silver is a very misunderstood metal. This room wouldn't be lit the way it is, and none of this technology and everything we do wouldn't even exist without silver. But most people actually have no clue about that, right? And but there will be an inflection point. It's at some point in the future where it could be headline driven. Maybe Apple can't produce iPhones, maybe Sony can't produce televisions, maybe Tesla or VW or BMW can't produce electric cars. I'm not sure what is going to be the catalyst, but there will be a point, in my opinion, over the next couple of years, and it could be who knows when, but it will happen, and we will have that inflection point when we see the metal actually start trading at its mining ratio.
Okay. Dan, question for you. You've been on both sides of the business now, first as an investor or partner of a mining-focused private equity firm, and now, of course, as the issuer. How has your experience influenced the way you think about operating a mining issuer?
It's a good question. As an investor, you are always trying to find dedicated management teams who can articulate, clear plans and really put thought and analysis into, A, understanding their strategy, and B, having an executable game plan that comes with it. And I think that's something that we've tried to do at First Mining, and I've been the CEO here for 10 months. And again, it comes back a little bit to the earlier point of kind of relentless focus on what are the things that are going to drive value in your business. Thinking about risk reward and risk return, which, is something interesting in the mining sector that I don't think there is enough time necessarily spent comparing and contrasting two deposits, where one is in a part of the world where you can get permits and that you can operate and you can develop, and the other one looks pretty similar but in a different part of the world. And it's amazing how often that those two projects get valued the same way. But it's one of the things that we're totally blessed with in First Mining is this portfolio of gold projects in Canada in places where there's infrastructure and great jurisdictions. So, I think bringing a bit of a risk return viewpoint into the decisions you make and how you allocate your time and your capital in running a business.
Great. Okay. Michael, as outlined in one of the charts there, most sub $25 million market cap companies are explorers, as you would expect. It's a tough business model. There's no doubt about that. Very few companies managed to move up in the higher market cap bracket in the last cycle. Why did you and the Vizsla management team decide to become explorers?
Sure. Well, yeah, I think we decided to become explorers as a function of kind of creating value, and for us to start as a company that was IPO'd, thanks to your help, Justin, about a year ago, we built out a team that includes explorers, but it also includes executives. It includes a fellow that runs Ausenco Engineering as a director. So we have mine builders, we have executives, we have people that have experience in private equity, but we also have a fantastic project that gives us the ability to kind of rapidly create value for our shareholders. And now exploration is a function of that. It's not the only thing that we do. It's not the only thing that we know how to do, but we do have a fantastic VPX in Charles Funk, who's an expert in exploration. We have directors, we have advisors who have all used exploration to create shareholder value, and that's why we decided to, at least at first, become an explorer.
Okay. First Majestic Silver is now a $2 billion U.S. market cap company. How do you move the needle from here and continue generating value for shareholders?
Well, it's there's several drivers, of course, but growth is one, but efficiencies is another, and I'm very proud of our team and the technological advances that we made over the last 5 years within our business. We announced. Well, actually, the financials come out on November 7th. We announced the production and recoveries already. We just finished the Q3 with 88% recoveries, which is the highest in the 17-year history of the company. And and we did this to save costs, right? Because the mining sector started losing money as prices collapsed in 2012 and 2013. Well, in 2014 as well. June 2014, silver prices broke through 20 and hit $16 that month, which is pretty devastating for us and many other miners in the sector. So we laid off about 1,500 workers over the next 2 years. But in addition to that, we had to bring technology into the business, and we cut our costs by 50% over the last 5 years. And it's now we're coming to this inflection point where we're getting the benefits of all that spend over the last couple of years. Now we have increasing metal prices at the same time. So the next couple of years for First Majestic is going to be very, very exciting.
Okay. So Dan, as highlighted in the slides, in the last cycle, no one jurisdiction produced the best performing assets, therefore stock performance. Yet First Mining Gold's focused on North America. Why is that an advantage?
Listen, I think, being in a jurisdiction where there is infrastructure and a place that people want to see mining, a place where there's access to good people to go to work every day, I just think it makes your life so much easier. It comes back a bit to, risk reward. Having I think these assets to develop in places like Northwestern Ontario, they've actually just received a project beside ours has received its federal EA approvals in August. Like this is an area, commercial area, that you can really get things done. And I think it's just that one less risk that you need to deal with when you have all the other risks of a deposit, finding it, making sure that it can work, getting it financed, getting it built, and then operating it. One more risk you don't want to have to deal with is there a government that's going to take it away from you when you finally get it built, or is it a place that people are going to give you the social license to operate? So I think it's a huge benefit in the portfolio that we have.
Okay.
And the stock's trading at sub-seed level. I seeded the company at 25 cents a share. I think it closed at 23 today. So
Yeah.
Canadian, by the way.
Okay, great. Last question. Mike, initially when you launched Vizsla about a year ago, the focus on the time was on copper and perhaps other base metals. You've since pivoted to silver gold. Why the change?
That's a good question. So as I mentioned before, we did do the IPO. About 6 months later, we raised about $2 million in an oversubscribed placement. We only had an exploration copper asset. But what we did have was an excellent team. And so we built this team, and I built this team around me, essentially, that I could go and run projects by this group of experts that all brought in as shareholders and later directors and advisors. And sometimes you're going down a path, and then an opportunity comes, and you have to pivot and take that opportunity. And that opportunity was the Pánuco Silver District in Mexico. It's really something special. It's about 80 kilometers from San Dimas, First Majestic's main mine, and it's high grade. It's district scale. It checked all the boxes so much that we had to kind of abandon a plan to go after a past-producing copper project in the Golden Triangle and just put all of our effort into, which it took almost an entire year, to consolidating this entire high-grade district. And now we have access to 10,000 hectares. Actually, even more impressive than that is 75 kilometers of vein extent. So that's like walking from here to San Jose of veins that have shown high-grade silver and gold on it. And at the very end of at the end of the day, we have an option on production. So we can shortcut into production. We can buy a mill, the tailings, agreements, and everything you would need. So, I know I'm going a little bit over here, but, the interesting part about this is that so many companies, they go into development, they maybe find a project that's middle of nowhere, they drill it, and 20 years later they might be able to build a mill or go into production. We can kind of skip that slump in share price, that on the Lassonde curve, what's called the Valley of Despair. We can skip that and go straight into production in the next couple of years. So when that comes across your desk, you kind of abandon some copper ideas.